Quick note, if you've ever thought about investing in a fund for cash flow or whatever, go to metkevin.com/cashflow, drop your info in there. All right, let's get into the video. Hey everyone, me Kevin here. I missed you this morning, but it's important for you to know that I'm not leaving. I may have accidentally now woken up anywhere close to on time, but I assure you, I'm not effing leaving. So, look, I really apologize. I just did the course member live stream. Remember that coupon code expires tomorrow. We took tendies on some crazy gains when I woke up this morning on the outlet option. Opened some new options. C3AI is looking head and shoulders on the 1 hour chart. There's some really cool things going on. Lots of plays to make. So I feel like I'm playing catch up here. But I want to talk a little bit about the market and what we're seeing, and to try to just make sense of this. So here's my take, and I'm sort of calling this like selective risk on, and then of course safe plays are blowing up. So selective risk on and safety. That's the definition of this market, in my opinion. The reason I say that is because I think you've got stocks like obviously Affirm, Amazon, Etsy. In my opinion, the Apple. These are kind of your safe-ish plays. And maybe I shouldn't lump Affirm into that. I'm just very excited about Affirm's partnership with Amazon, so I'm kind of bestowing Amazon's safety over to Affirm. Yet I love Affirm because you still have all this insane growth in Affirm, which is why I threw a bunch of money into it last week, like $400K on Friday. But anyway, excuse me, this is still a great cough, won't go away. But anyway, it kind of makes sense when you look at things, and PayPal just had an announcement, that's why they bounced, that potentially PayPal is going to start including stock trading, kind of like Cash App. I think Venmo, somebody said Venmo was trying this, but kind of like Cash App or SoFi, which I think is competition to Square and of course SoFi. But, and I don't see it as like that important of a catalyst. Whatever. But I do believe in this market. You're seeing safety stocks doing well, and I think they will continue to do well. The high quality stocks will do very, very well, especially if what I've been talking about since February continues to be true, which is that we would see some form of rally on or before that September to October range, especially once we start getting inflecting to the downside CPI data in October and November, right? So I still believe that to be true. And I believe that's why you're seeing a move on companies like Apple up 3%, Etsy up 3.71% at a new, almost a new high here of 218, certainly a recent high. I know previously it's briefly ran up to like 230 and 250, especially when Elon Musk has talked about them and like pitched how much he loves Etsy, which I love Etsy too. They make it dangerously easy to spend money, which is brilliant. It's Apple Pay, boom, it shows, it's great. And so you are seeing a little bit of this reversal in the market overall, where it's okay for good quality companies to actually go up again. It's okay for Tesla to finally be on a slow uptrend again. It's okay for a great company like Enphase to be on this sort of uptrend again. It's okay for Home Depot to be moving up, or Facebook, or some of these higher quality companies. We know Airbnb is here to stay. They get stuck sometimes in the recovery reopening trade, though. DocuSign over 300. These are great quality companies. And that's why I think we're seeing sort of almost a flight to these in the safety aspect. That's one bucket. So you got the safety bucket. In fact, let me just pull up Google really quick. I want to see just what they're doing today. Only up about 2/3%. Google's another one I'd consider as part of that safety group. So anyway, I feel like you've got this safety bucket where because the S&P keeps sort of running, people are taking their cash and they're throwing it into these because they're like, well, do I want my cash to sit here doing nothing, or do I want to just be in the safety plays? And if a different opportunity comes up, I could always pull out of the safety plays and put cash into something else. So personally, I feel like that's a little bit of what's happening right now. No guarantees, obviously, but just based on what I've been seeing over the last 2-3 weeks here, I think safety plays makes a lot of sense. The big high quality companies doing well. Then we have what I call selective movement in risk stocks. And so selective means one day you're a king, the next day you're a bum. Like AMC, up 9.6% today, amazing. We've had a great movement on AMC since it hit like 29. It's almost just been straight up. It hasn't been. It's obviously very volatile. Every day is different with AMC. But support.com, Meta Materials, Hims and Hers. Some of these are more mind medicine. Some of these, in my opinion, are more like we're here today and we're gonna get a nice run and then pull back. Get a run, pull back. Wish has just been beat to crap, and it's up 5.12% today. This is not to say that they're bad companies, but nobody would look at Wish and say, oh, this is a safety stock, right? We just know it's been beat to crap. I mean, this, yeah, it's not, well, here, this kind of reminded me of the Head and Shoulders on AI, which, look at this, AI reports in 2 days, and AI has been in the gutter. But take a look at this when you go to the 1 hour chart. A course member brought this to my attention this morning in the live stream, and we loved it. It's gone up a little bit since then. But anyway, this is a really nice reverse Head and Shoulders. So it makes you wonder, like, okay, are we going to see a nice sort of pop on C3AI? And looking at this, zooming out, it certainly feels like your risk is relatively limited to a downside of around 44. But you never know with stocks, right? You just never know. It's at 52 right now. It's got a history here. It ran up to 183 post IPO at one point. It's insane. Anyway, so I do believe that there are these momentary sort of risk-on plays. And what I think is fun about those momentary risk-on plays is before something goes risk-on, I do think there's an opportunity to throw potentially some sort of call options, shorter term. These are very, very high risk, high reward, right? But like on Friday, we threw a call option on Owlet. The thing printed tendies really, really well. I mean, the call option we picked was like 3 weeks out, and it printed somewhere around, 200% or something like that. In fact, I'll pull up. Here's that screenshot. Here you can see, if I get rid of the Twitter notifications here, I woke up this morning and I looked at it. I took a screenshot of it and I immediately closed it. But anyway, yeah, I put $19,000 in and it was up 202% this morning. I'm like, thank you, bye. I mean, you gotta be very, very careful because it could easily go the opposite direction with these shorter term calls. So just be very, very careful on those. But I do think there are opportunities. I mean, like Arrival has been beaten the toilet. Matterport has been beaten the toilet. And now you're starting to see a move on these. These could be here today, gone tomorrow. Keep that in mind when you're investing. So personally, in this market that we're in right now, I still like RCC, real estate, cash, crypto. Obviously, I'm taking from my RCC pie and I'm putting into my stock pie when I see good opportunities. Whether that's Lemonade, Outlet, I think there's an opportunity in C3AI or Affirm, right? It doesn't matter. These are opportunities in my opinion. I'm willing to take from my RCC pie and put some in. Doesn't have to be everything, but I put some in. That's sort of how I go into the market. This is why when sometimes people are like, oh, Kevin, you changed your mind. It's not changing my mind. The whole reason I have money in RCC, real estate, cash, crypto, is to enable me to be ready to buy opportunities when I see them. And so that's kind of what we've been doing. Let's see here. Yes, so what else? Okay, so you've got these pies or baskets, I think is an easy way to put it when you're looking at investing in this market. In fact, here, what could be very easy is if we just do a quick little outline here. All right, so let's say this is one bucket right here, and this is your real estate, cash, crypto right here, and then you have the stock bucket. The stock bucket is right here. And so you want to take from this bucket and throw into here. It's just worth knowing that right now, the way the stock market feels, I feel like there are little partitions in the market right now. So if I draw something like this, that gives me 3 partitions here. I feel like here in this bucket, you have your sort of safe. Then you've got your selective risk. Right? This is what we've been talking about, where all of a sudden it's like, oh, now this is running, now that's running, now that's running. And the selective risk is really just the market trying to prop up stocks that have been beat to crap and been oversold. So you look and see a bunch of stocks that have been oversold. They're selectively, okay, now you're 10%, now you're 10%. It's kind of like rising tide lifts all boats, whatever, you know, old lines. Anyway. So you got your selected pie, you got your safe, which we talked about. This, in my opinion, is obviously like your Amazon, your Google, your Apple, the bigger companies, the Enphase, the Etsy, blah, 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 blah. Not SPACs, okay? Like SPACs would be right here. This would be SPACs. This would be Momentum. Goes right here. And that's your selective risk bundle right here. Then, and Safe is also, I don't want to say stay at home because then it sounds like Peloton and Zoom would be in here. I don't agree with that. So I would say maybe this last bucket, we would call this COVID sensitive. So COVID sensitive would be your last grouping. And this is really, Peloton could be in here. It's sensitive to COVID, but it's also recently been failing. I've sold out of Peloton. You've got recovery stocks. Recovery stocks you gotta be careful of because you also have two divisions of recovery stocks, right? You've got recovery stocks that are travel related, hotels, airlines, potentially restaurants. These not doing as well as the retail. Although then if you look at Nordstrom, they just got destroyed, right? So a lot of the recovery. They're also hurting today. I think Dave & Buster's, for example, was down like 5%. It ran a little bit last week, but still, it's down 4.39% right now. Nordstrom's down another 4%. TripAdvisor down 3.8%. JetBlue down 3.3%. You kind of get the idea. Peloton down 3%. Blah, 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 blah. Okay, so you got your safe, your selective, and your COVID sensitive. These are kind of the three baskets that I see in the market right now. And really, my strategy here is on safe, again, the Etsy, the Enphase, whatever, I just want to own more shares. I want to own these, I want to buy these, and I want more of them. Like if a firm goes to $85 or $80 again, please let me go shopping for more. Perfect. The selective push ones, this to me, again, SPACs, Momentum, I'm interested in either selling puts or potentially doing the short-term, like 3-week YOLO calls. You gotta be very careful on those though. You could lose all of your money on those. If you go YOLO calls, there's a reason they're called YOLO calls. The one I showed you with Outlet, could have lost all of that, okay? So just be careful. But you could try to protect yourself a little bit by going in the money a little bit if you want. And then the COVID sensitive, these are the ones that I'm kind of waiting for. I'm waiting to see if we get more of this Delta FUD, I like to call it. And remember, FUD, fear, uncertainty, and doubt, does not mean fake news. I think we have this society that has associated FUD with fake news because people say, oh, that's just FUD. Yeah, but FUD is different because FUD could be true, right? So FUD is just something that creates fear, uncertainty, and doubt. Here's FUD for you, okay? Look, EU to reimpose travel curbs on the US amid rising COVID cases, right? Look at this. Moderna BioNTech rally. Well, that's just about the rally. Okay. Where was another one? Virus variant batters airline bookings for Labor Day weekend. FUD, right? It's true. Here's a really good one. I mentioned this on on Twitter, and then I deleted it because I couldn't explain myself properly. I tweeted that this is very bad news. New Zealand reports first death linked to Pfizer vaccine. Now, I want to be very crystal clear, and I could do this on video. I believe in getting the vaccine. I think people should get vaccinated. But what happens is when you get something that creates fear, uncertainty, and doubt, like New Zealand saying there is a rare but known side effect of getting the Pfizer vaccine, and a woman just literally died of that, that's bad. And Japan reported this morning that they're investigating 2 deaths potentially linked to Moderna. So me talking about that is saying this is bad for people getting vaccinations, right? And we want to be aware of that. We don't want to stick our head in the sand like some people on Twitter want you to do, where they're like, well, you shouldn't be bringing attention to that. Shut up. Like, we should understand everything, okay? We should try to make sure we analyze everything. So again, like this, to me, is a style of FUD. It creates fear, uncertainty, and doubt. It is true news, but it creates fear, uncertainty, and doubt in the vaccines. It leads to more people who are anti-vax reiterating why they are anti-vax, which means less people getting the vaccine. And I respect people's choice. I want to make that very clear, too. I respect people's choice, but I do think stuff like this hurts. Like, I wish we didn't have these problems, right? I wish it was just, no, there is no known rare chance of you dying, right? So this, going back to the stock market, because this is such a sensitive issue, like you bring up this, you piss off, you just piss everybody off. I'm sorry. If you're watching this and you got upset by me talking about this, I'm sorry, okay? That's just what I do. We try to address everything that we can. So the point is, that creates FUD around crypto, and that hurts recovery stocks. So I am still waiting for the opportunity to take money or more money out of RCC and then move it into the COVID sensitive stocks. I'm not really exposed to anything COVID sensitive right now. Well, I'm not in any recovery stocks. I'm in 0 recovery stocks right now. I want to be in recovery stocks, but I'm worried about this COVID winter. Again, I'm out of Zoom, out of Peloton. Really, most of my money is just sitting in relatively safe. Now, by relatively safe, you can't really, I don't think, put Tesla. Well, I mean, I think you would. Tesla's probably the least safe of the safes. Let me put it that way, because obviously it has a much higher valuation than like Amazon. So you probably have scales of safety within this, but I think y'all know what I mean, that it's not a selective momentum mover. I do hope it rallies here in September and October. But it's also not COVID sensitive. It's more like an Etsy or an Enphase to me. Established company. Really, I actually think Airbnb belongs over in that safer side. If there are only these 3 choices, that's where I would put Airbnb. But yeah, okay, good. So that gives you insights on this. Now, it's very important that I remind you that coupon code expires tomorrow night. So check it out in the links down below. And folks, let's go. All right, folks. Remember, you can use that 40% off coupon code Jack's Birthday on any of the programs. A link down below. You can bundle them up as well. A lot of people get the bundles. I think bundles 2, 4, and 5 are the most popular. And folks, thank you so much for being here. We'll see you in the next one. Bye.